really the first lesson for us around the use of bank data and open banking. There's only one thing that really motivates consumers, and that's convenience. We've seen examples of people offering cheaper services and cashbacks and all sorts of things. Consumers will pay more for something that's easier. You know, it's convenience that actually is the real motivator. And there's still a lot of people out there in the industry talking about 9% or 40%, 30% of people willing to share their bank data. We see examples upwards of 70 or 80% in some use cases. That's almost everybody, you know. 10% of people won't tell you their name, address, and date of birth. So we're pretty close to almost everybody else out there in the market. So our first lesson around bank data is if you give people a strong reason, absolutely they will do it. If it's Sunday at 10 o'clock at night, then I could give you a loan in 30 seconds. We've got customers, one of them in London can do a same-day decision and same-day funding on a mortgage. If the next time you are buying a house or a car, you could get that loan at a personalized rate specific to you in 30 seconds. Would you share your bank statement? Absolutely. You know, because everything that Imran talked about the constructs and the security is there. So of course you would. So it's all about context, I think is my second one I wanted to share quickly. And if we can use the context and the benefit, a consumer benefit, but also, you know, something that really affects the business, then there's drivers on both sides. And as a B2B business, we have to think about the consumer. If we lose sight of the consumer, which is too easy to do in B2B, we struggle with that ourselves because we don't tend to use the bank data each and every day. If you can keep in mind the consumer benefit, if you can be the consumer yourself and understand how that interaction is happening, then I think you can really understand it. I think one of the biggest lessons for me is in financial services, not being a banker myself, is that it's a hugely risk-averse industry. Actually, everybody, and you know this, Richard, right? Everybody in the industry is against you. All the way down to the risk and compliance officers, the AML officer, who is viewing their job on the line by doing anything differently, views their house on the line because they're personally liable for considering something different, just stops you. And I think this is, for me, one of the biggest challenges in FinTechs, is not selling to the other small FinTechs and disruptive propositions and so forth, but selling to the big banks. And how to push through that barrier is incredibly difficult because they're all working against you. For me, being involved in bank data, Open Bank Working Group 4 years ago now, even before that with the EST and so forth, it's only been recently that we've seen a step change. And I think that's because of the regulators. In the UK, we're really fortunate with the FCA and sandboxes and all the rest of it. But it's only been in the last 6 months that open banking or the use of bank data has become mainstream. Not for the small ones, but for the big banks. And that's because of that acceptance to consider something new. When the FCA put out new guidelines around doing better affordability checks, it mentions open banking as a possible solution, and that kind of opens the door enough to at least have a conversation.